Hello, hello. Happy Friday. Welcome. Thanks for joining my second taxing subjects Zoom. Kind of my intention for this is to just create a space where people can come get their questions answered and just get more familiar with me and what I do and some of my referral partners. So I kicked off this kind of summer series last month with a bookkeeper that I refer business back and forth with, Erin Turco. And we talked with her about all things accounting and bookkeeping related, and that was really fun. And then next month's guest is going to be a realtor, a local realtor to Oregon City. So if you're interested in real estate investing as a tool for wealth or retirement, that would be a great one to join. That'll be on Tuesday, August 13th at noon. But today I have my friend Laura Donaldson joining me. She's an attorney that I share with her. So thank you so much, Laura, for sharing your space with me and for joining me today. And can you maybe just tell us a little bit about yourself and how you got into the career that you're in?
Sure, absolutely. Thanks for having me, and it's always a pleasure to share space with you, Shay, and to get to know you and all of your people. I really appreciate the opportunity to be here today. So I became a lawyer 20 plus years ago. I wanted to help people. And the reason being is I came from a poor family myself. My parents really struggled, and I saw what they went through. Their access to justice was pretty limited because they didn't have a lot of money. And so I wanted to help people that had similar issues as my parents did. So I spent a lot of time with our low income legal clinic. They used to focus on tax related issues. They don't that much anymore. It can be a very complex area of the law. So it's great to have partners like yourself, Shay, and other folks that are out there that like to help. Currently, I help small businesses and individuals with their tax issues and with their debt related issues. So I do a lot of saving homes from foreclosure. We stop garnishments, credit card companies that come after people and they garnish wages, things that take people's money away from them. It's too hard to make a living and just give your money away at this point. Food is expensive. So that's how I kind of got into it. That's why I stay in it. I enjoy working with my clients. They're all really good people that just have really difficult financial issues. And I like the strategy in helping them get rid of those issues. So that's
Awesome.
what I do.
Well, thank you. Thank you for sharing that. And welcome those of you who have joined us.
I guess I have a pretty specific question about what kind of relief you know about for student loan debt.
Yes, so there's a whole bunch of programs that are going on right now. One is relative to your income. It's called the SAVE program. The SAVE program, if you're higher income people, it won't really help you. But for folks that are median income or lower income, it's a great program. Your payment can be as low as zero and count as a payment. So yes, so that program is great. There's another thing if you have lower income and you're suffering from financial hardship. One of the things that we've found is we can get either total or partial discharges of student loans. So if you owe $100,000 of student loans and you're suffering from financial hardship, and that is not expected to improve over your remaining earning capacity, so before you retire, we can get those discharged through a bankruptcy proceeding. So if you can't otherwise, if you have other debt, we have people that file just for student loan debt as well. You don't necessarily have to have other debt, but the courts will consider that. It depends if it's federal student loan debt or if it's private student loan debt. So that program applies to federal student loan debt, but not to private. But we bring them all together when we're negotiating and getting rid of debt. So if that's something that you're interested in chatting with me about, I'd love to chat with you about that. So because of, partly because of Biden, but the Department of Justice also sees there's many people that are struggling with this particular issue with student loans. And so they've offered way more options with respect to relief. So it's really important to know if you go to studentaid.gov, to figure out what kind of student loans. If they show up there, they're all federal. If they don't show up there, they're generally private. And that's where we start.
That's so super helpful. Thank you.
You're welcome.
And we'll have a way to contact you so that we can come and have a meeting with you.
Absolutely.
So I know this isn't a political meeting, but you did say Biden. So I'm wondering, are you sensing any kind of urgency, like pre-election, like if people want to fall into these programs, should we do that right now?
It's a great question, and I wish I had a crystal ball because we all are a little bit concerned that yes, some of these programs are going to be challenged or go by the wayside that are currently in effect.
Mm-hmm.
Other ones, though, I will have to say the Department of Education sees the push that people just are not going to be able to afford to continue or even start paying on their hundreds of thousands of dollars of student loans. So I think something will continue to exist, but whether it will at the current level we have is questionable. So great question.
So my son is just starting college and was offered the student loans, just like a healthy amount of debt. I know that there is that idea of that we want a certain amount of debt. Obviously, as a young person, I don't want him to start out in the wrong direction. Just any kind of advice that I could pass along to him, especially if I could say somebody else, a professional, told me that this would be a good idea.
Yes.
As he
So the advice I would give to him and to you is one, Parent Plus loans have the hardest, they're the hardest ones to get rid of. So Parent Plus is where you sign up on behalf of your children to get loans. So that's from me to you. Just be very careful with those loans because we do want to help our kids succeed. We want them to get the best education, right? But at the expense of, I have grandparents who are in their 80s who owe hundreds of thousands of student loans because they co-signed and they have no way to pay them, but then they have homes and land and assets, and so it gets to be complex. With your son, I would say borrow the minimum, maybe for tuition. If he's able to work during this time and pay for his books that way, that's a great way to do it. When I went to law school way back when, it was much cheaper than it is now. But that is one of the things that the advice I was given is keep it at a minimum. I still had student loans, but they were reasonable. The other thing is once you have them, always be on some sort of payment program, even if it's the SAVE program at zero, because interest is what's killing people. The principal, not so much, but the compounded interest is horrific. So nobody can get on top of that. So, but good for him for going to college if that's where he's headed. So,
yes, yeah, thank you very much. Appreciate it.
yeah, absolutely.
I mean, what would you say? I know this is really subjective, Laura, but what would you say like a reasonable amount of debt to leave college with, a manageable amount in this economy would be after 4 years?
That's a hard one because tuition has gone up so much, right? And some people start out at community colleges and then get all their credits at the lower cost institution and then will transfer to college, right? To save money. But other people just automatically go to that 4 years. So I would say if you're trying to minimize costs, that's one way to do it is keep it at the lesser amount. When I went, tuition was about $18,000 a year for law school. And then after that, it's increased to like 40. So, what's reasonable is kind of hard to say. I don't think any of it's reasonable right now. And I think that people should look into trade schools because they're less expensive. You get out, you get the experience. Mentoring is huge. I love my mentors and I love being a mentor just because you get so much more experience from people who've done it and been there than those that are just kind of starting out. And
Yeah, I agree. I just had a very similar conversation with someone the other day about how the older I've gotten, the more I would rather learn from someone who's gone right ahead of me and done what I want to do rather than a college professor that maybe has never done it before.
yeah, yes. And they make our mistakes for us, right? So we can see what's happened and then learn from them and then move forward. So that's all good too.
But do you see like an average threshold of debt where people usually get to the tipping point where it is more beneficial to file bankruptcy and start?
Sometimes that's a great question. Sometimes it's more of an event. So if I have somebody who's had a stroke and doesn't have medical insurance, or had a home that was in foreclosure, or a big event like that, that can trigger a bankruptcy filing. But most of the time it's medical, and there's $150,000 hospital bill and then an ambulance bill. And when you just compound all of it, the first thing I always suggest is go to the hospital and ask them to negotiate the bill, because often they have programs and then you don't have to file a bankruptcy because, you know, you have other relief. But you still have to pay something. But in that situation, if you're unemployed and you don't have any cash flow coming in, then it makes sense to file what we call a Chapter 7, which is a liquidation chapter. And you basically get rid of all of your debt and you get a fresh start. That's our Fresh Start program. Process is about 90 days in total. You're in it, you're out of it, and then you're done with your debt. The debt you're not done with is debt secured by your home or your car, because you lose that collateral if you don't pay for it. So
that was going to be my question. So you can file Chapter 7 and keep your home and your car. But
yeah,
everything else, if you have a boat or a vacation home or any other assets, you would need to liquidate.
And you really could, and there's certain limits, right? So we have what are called exemptions. Exemptions are the amount of equity you can have in your stuff and still keep it and file a bankruptcy. If you have too much property above the exemption amount, so if you have property that's worth $50,000 and the exemption's only 10, you've got $40,000 in equity we need to protect. In that case, I would recommend a Chapter 13, which is a restructuring or reorganization. The creditors have to come out as well in Chapter 13 as they would in Chapter 7. In Chapter 7, if they would get $40,000, in Chapter 13, you keep all your stuff and you pay that $40,000 over a 3 to 5 year period of time. So the goal is you retain all your equity. Your creditors still come out the same, but you pay them that equity over time, and you hold on to all of your property. That's the goal. But that's why you need somebody who's familiar with the exemption laws in bankruptcy under the federal code to really protect your stuff. And that's where I come in. So yeah, my job is to help you keep all of your stuff and to get rid of your creditors. So that's what I do.
People that might owe back tax debt, is there one type of bankruptcy over another that they would benefit more from? Can both types forgive tax debt, and how does that work?
Great question. So the rules are a little bit different for both bankruptcies, but Chapter 13 is a great tool if you owe, for example, trust fund taxes. So trust fund taxes are where you have a small business, you withhold employee taxes, but then you don't pay them over to the government like you're supposed to, because people run into problems and they use it to pay employees. There's just not enough money to go around. Well, trust fund taxes are not dischargeable in bankruptcy, but you can use a Chapter 13 to structure your payment rather than the IRS telling you what your payment is going to be. The bankruptcy, you can govern how much you pay each month as long as it gets paid in full over that 5 year period of time. So you can do creative structuring with that. Now, other types of debt, if you owe tax debt, whether you're an individual or a small business, you can use bankruptcy to get rid of. The rules are that the returns have to be filed, that's where Shay comes in, and assessed. And then once they're filed and assessed, the clock begins to run for the IRS to collect those taxes. So we want the IRS to have enough time to collect before we file a bankruptcy. If you wait 3 years, so if they've become collectible, they've been assessed for 3 years, those are dischargeable in bankruptcy. You get rid of them. If it's less than that period of time, then we have to count time periods as to when they will become dischargeable. And so in that instance, you want a skilled lawyer because sometimes you can mess up the timing and then they're
Like it might be beneficial to like wait 6 months or something.
Yes.
If it meant that something was gonna expire.
Exactly. Yeah, and especially if it's large tax debt, so we want to make sure we're not blowing those deadlines.
And
Yeah.
what are the ramifications following bankruptcy in terms of your financial health or credit scores or any of that kind of stuff?
So in terms of credit itself, a bankruptcy is a hit to your credit, but also is carrying a large amount of debt. So it's really relative to how much debt you're carrying. So your debt to equity ratio, when you file a bankruptcy, the bankruptcy eliminates that debt. So it sort of changes the dynamic. Yes, you have the bankruptcy hit, but now you have less debt, right? And then you can start rebuilding from there. So. The one thing I will say when I'm looking at anybody's situation for a bankruptcy, I look to see if a debt consolidation makes the most sense for them instead of a bankruptcy, and then you don't have the credit hit, but you do still have a payment. But if based on financial situation, debt is just too large, or income's just too small, Chapter 7 is generally the liquidation chapter makes the most sense.
Like I help people when they're behind on their taxes, I help them get caught up. And the things that I can do with the IRS are help them get into a payment plan with the IRS. There's something called an offer in compromise, which is where you offer the IRS less than what you owe. But what I've found is that none of my clients have ever qualified for that, because it seems like you have to be insolvent to even get into that program. So I don't deal a lot with that. But I can also help clients get into the currently non-collectible status where at least they won't keep bugging you with letters and threatening to take your bank account or stuff like that. And the IRS debt expires after 10 years. So I like to pull transcripts and look when people have past debt, because I have had people that have been able to wait it out, and after that 10-year period, it falls off. But I do think that that's probably going to be changing. The IRS has been pretty lax about collections efforts for quite some time now, and they are talking about ramping up. So probably not the best strategy to wait it out 10 years, but if you have old debt, it's possible that it might be expiring soon, and then you wouldn't need to worry about.
So I would add to that and say that the IRS has a unwritten policy that they will not take people's homes. So what happens is if you get delinquent, they'll file a lien against your home for the debt that's owed, but they won't foreclose on their lien. And then after 10 years, it expires, as does the lien. So I've had a couple of clients who have waited out. I've been practicing for 20 years, and I've had clients that came to me early and they've waited out their liens and it's worked. But the IRS can file a complaint to extend periods for collection if the sum is big enough. And by big enough, I mean, in the client that it happened to, for me, they owed almost $300,000 in tax, and it was resulting from business. But your normal consumer isn't going to have that size of debt. So, but the one advice I would give is never, even if you can't pay the tax, always file the return, because filing the return and getting the tax assessed makes it go away faster. Like it gets the clock ticking. Whereas if we don't file the return at all, no clock starts ticking, I can't get rid of it. And then the first thing I'm going to say is we got to get those returns filed. Then we have 5 or 6 years that are having to be paid for all at once and filed all at once. And then it makes it a little more difficult. So.
Yeah, and the failure to file penalty is like so much higher than there's a failure to pay penalty. Like if you file by April 15th but can't pay, they're going to penalize you for that, even though you filed. But that's like a 0.5%, I think, and the failure to file is like 5% of what you owe. So
huge.
yeah.
And the other thing I would say is on those penalties. So this is one of the creative ways we help people with tax. It's generally people with tax debt have other debt. So they have student loan debt, they have credit card debt, they have personal loans, they have medical stuff. They have a lot of debt, right? It's not just the tax debt. But with penalties, there's what's called a Chapter 13 bankruptcy. So there's 7, which is the short bankruptcy, and 13, which is a 3 to 5 year plan. We can eliminate penalties. We used to call it the super discharge, but 13 still works the same, where we can get rid of those penalties because they're what we call pecuniary, meaning meant to punish you, because you didn't do something by a certain time. Well, the federal court doesn't like that. They're like, we're not going to punish people who are trying to get a fresh start. So as long as you've done your due diligence, you filed your returns, and you just haven't been able to pay, we can wipe out those penalties that you're talking about. Again, the only ones we can't is if you withheld money that belongs to someone else, which is the trust fund penalties. So that's employee taxes. But for your own personal ones, we like to wipe out those penalties all the time. So
Yeah, that was really good. I just learned that the other day when we chatted. So that was really, really helpful information to know.
And the other thing I would say is the state of Oregon, to me, is worse than the IRS in working with people. Their interest rates are higher than the IRS is. And if you need an installment payment program and you work with I would say work with Oregon first, get that established, because if you work with Oregon and all your money is going to them, then you reach out to the IRS and the IRS puts you on uncollectible because they get it. They know you got to pay Oregon first. There's no statute of limitations on collection for Oregon, even though there is for the IRS. So it's another good tool. Let's pay Oregon first because we know they're never going to go away, but the IRS will eventually at some point, right? So we want to maximize the best use of our cash flow, and that's how we do it. So, and I love to help people budget their money because that's the biggest thing is I can't pay everybody. There's too many people with their hands in my pocket and not enough cash to go around. So that's what we do.
Nice. So along that lines, is there like an average cost for a simple bankruptcy, or what would your average client pay for your services?
So it depends if you need a chapter 7 or you need a chapter 13, and everybody's situation is sort of different. Chapter 7, if somebody can't afford a lawyer, for example, if all they have is Social Security or minimum income, I'm going to refer them to legal aid clinic because I give my time there. People give their other attorneys give their time for free for access to justice. And so you can get the chapter 7 service there at no expense. And they'll get other fees waived, like there's a filing fee to file with the court. Chapter 13 is a different matter. So chapter 13, you're making a payment over time. You're working with secured creditors. It's a little more complex. You're dealing with claims. You're with your lawyer for 3 to 5 years. So in chapter 13, we get a small amount in advance of filing, and then the rest of it, we get paid as an administrative expense through the case. So, and it depends on the lawyer in the area. I generally calculate the time I will spend prior to getting into a case, gathering documents, doing our due diligence, making sure we understand what creditors need to be paid, what we're trying to do in the case. So my fees getting into a case generally run about $1,500 on a 13. My chapter 7s generally are about $1,800, and that's for the full case. That's it. It's like a flat fee. But the court filing fee, they charge $338 for a 7, and they charge $313 for a chapter 13. And those can be paid prior to filing, or they can be paid in installments after a case is filed. But we, look at everybody's individual situation to determine, what they can do. A lot of times people are paying creditors, and if they stop paying those creditors because they're like, we don't have any money, how are we supposed to pay a lawyer, right? That makes no sense. Well, there's certain things you can stop paying to allow you to afford to pay to get in, and then you can recommence what you're trying to do after the case is filed. So we help you figure all that out.
Nice.
Yeah.
Thank you for that.
Yeah.
I will make sure to send out Laura's contact information with a link to the recording when we have this available.
So the questions that I have are, when somebody comes to you, do you ever talk to them about whether they have if they're a small business owner, if they have a business bank account and a personal bank account? Do you ever talk to them about segregating the two, or what do you usually see?
I see commingling of funds a lot, but I always recommend, that's one of my first recommendations, is please go open a separate business bank account. There's so many reasons to do it. I mean, if you're an LLC, you're kind of doing that as liability protection to separate your business from yourself. But if you're commingling your funds, they're not gonna see any separation there. And so you've kind of defeated the purpose of that separate entity. And then another reason that I recommend it is because right now in this day and age, it makes the bookkeeping so easy. If you can run all of your business transactions through one account, you can pull it into your QuickBooks or whatever you use and, you know, tell it the first few times what each charge is for, and it will learn, and you're not really having to do a lot of data entry, or like worst case scenario, and why people hate tax season or tax time is because they don't want to get 12 months worth of statements and try to go through and remember and highlight the things that were business expenses. And I don't have time to then put that into an Excel spreadsheet or into a bookkeeping system to try to total it out. Like that would take a lot of time too. So if you're doing it throughout the year, then tax time can be a lot less stressful, and you can learn to use your financial statements to see the health of your business, which can be helpful too. So that was a long answer, but yeah, I definitely recommend the separate business bank account. And I do a lot of business coaching with small business owners, since that's kind of predominantly most of my clientele are small business owners or aspire to be. So I like to get them off on the right foot, and I always recommend using a bookkeeper if that's something that they can afford.
And as part of small business coaching, how about small businesses that have 1 or 2 employees? Do you recommend that they use a payroll service, or do you recommend that they try to do that themselves in-house?
I don't recommend trying to do payroll yourself in-house. I've seen a couple disasters lately with QuickBooks. I mean, QuickBooks will do it for you. You see them advertising that all the time, but you still need to have some knowledge behind it and actually physically send in some of the payments. I've had a couple clients that really thought everything was happening automatically, and maybe like the entries in the books were happening, but like no money was actually leaving the bank account, and so nothing was getting paid. But if you're using a professional bookkeeper, I think you could get by if you just have 1 or 2 employees with doing something like Gusto for payroll. It's very user friendly. They do everything for you. You just want your bookkeeper to be making the entries right into your books, because a lot of times if like a big chunk of money comes out of your bank account, it probably wasn't all for the same thing. Like there was some that was wages, there was some that was your employees' taxes withheld, the trust fund ones that you were talking about that need to be sent in. And then there's the part that you owe, your employer taxes. So if that all gets lumped into one category in your books, you know, if the bank pulls it in and just says, hey, payroll, it's not going to be correct. So you want your bookkeeper to be able to go in and separate out the wages from the taxes so that everything ties out when it's time to file.
And if I am a small business owner and I come to you and say, I'm not sure if I should be taking a distribution, or if I can take a portion of my earnings as payroll and then I can take the rest of it as a distribution, do you have a recommendation?
Well, so there is a lot of confusion around that in the small business world. If you just go out and start your own business, or even partner with someone to start a business, you're still essentially self-employed in the eyes of the IRS. So you would not want to pay yourself on payroll. You're going to pay tax on your net income, regardless of how much you actually take out. So let's say you have a business bank account and all your income's going in there and you don't need it for some reason. Maybe your spouse works and this is just your side thing. Even if you leave it in the bank all year, you still have to pay tax on that money when you file. So it doesn't really matter if you pull it out or not. So I do have people ask that question, and you can pay yourself whatever's available in the bank to pay. I usually recommend doing it in like nice round numbers on a regular basis so that your bookkeeper can easily see that those are your draws and not an expense of some sort. And then as far as paying yourself on payroll, when that happens is when you decide to be taxed as an S corporation, or you can just form a corporation too. But the route that a lot of people take is they form an LLC and then they make an election with the IRS to have their LLC taxed as an S corporation. when you make that election, now you are required to pay yourself on payroll if you're participating in the business. And that's also something that people miss a lot. They'll make the election because someone told them to. It's this great way to save tax, and they won't pay themselves on payroll. And the IRS doesn't like that. If they were to audit you, they could go back and reallocate some of your distributions to payroll, because they look at it as, you know, you're avoiding the payroll tax on that salary portion that you're supposed to be paying yourself. So,
And do you know if the tax rate is different between the two? Whether you're taxed as a corporation or?
okay, so there's a C corporation and an S corporation. C corporations pay tax within the entity itself. And I'm not sure on those tax rates. I don't really do C corporation returns. S corporation is what's called a pass-through entity. So all the income or loss of the business passes through to your personal returns. So you would be taxed at whatever rate you were according to your other income. You know, if you were married, you'd have to take into account your spouse's income. If you have investment income and stuff, that could put you in a higher tax bracket. But where the tax savings comes from with that S corp election is the part that you pay yourself on payroll. You're still essentially paying the self-employment tax on that, because you're paying Social Security and Medicare tax on the company side, and then you're withholding half of it from your payroll. So like you're paying half and your company's paying half, but really you are your company. So you're still paying all of it on your salary portion. But what your company makes above and beyond that is only tax for regular income tax purposes. So you're not paying any Social Security and Medicare tax on that remaining amount. And that's where the big tax savings comes from having an S corporation. Sometimes people don't realize that, and they pay themselves everything on salary, and then there's nothing left over. And if you do that, you're probably paying about the same amount in tax as if you wouldn't have made the election. But you have the extra expense of a corporate tax return, which is spendy. I mean, my individual returns that have self-employment income on them, like a Schedule C, average around 800. If you need a separate return for your S corp, that return starts at 1,500. So, and goes up from there, and that's separate from your individual. You would still need to file your individual return. So just the tax return itself can be a big added expense.
Sure.
I usually don't recommend that people start thinking about that election until their business is netting 100,000 or more. Kind of my threshold. Everybody's different. I know some other accountants will say 60,000, and it kind of depends on what career you're in, because you're expected to pay yourself a reasonable salary. That's what the IRS says, a reasonable salary for what you're doing. So if you're managing your company, you know, you should probably, and full-time, you should probably be paying yourself around $100,000. Like if you were to go get a job somewhere, that's what you'd be making. If you have a cleaning company and you're cleaning 20 hours a week, well, that's different. You would kind of do some market research and see what people are getting paid to do that, and you'd pay yourself that salary, and then whatever's left over would be distributions.
And is there ever a time if somebody has an LLC, you would recommend they don't pay self-employment taxes quarterly?
If they're losing money.
Okay.
A lot of new businesses are just breaking even, or possibly even operating at a loss. So if you aren't actually making a profit, then you don't need to be paying in quarterly. Also, if you, I see this a lot of times where the spouse works and has a lot taken out in taxes, and maybe they like getting big refunds. If your income isn't going to create a tax liability at the end of the year, you don't need to pay in extra, but you just need to be careful, because it is your combined everything at the end of the year. So it doesn't really matter how it gets paid, as long as it gets paid. So it can either be withholding. Like one thing that I see single member S corp owners do a lot with their payroll, because it is a hassle to have to pay in quarterly, right? And they're not even 3-month increments to make it easy, right? It's April, June, September, and January. So you get 2 months between the first and second, then 3, then 4. It doesn't make sense.
Yeah.
So they'll have extra payroll taxes, extra federal and state tax withholding from their paycheck taken out to cover what the company is going to make above and beyond in distributions, for example. That way they don't need to pay in quarterly. So you could do something similar if you had a job and a business on the side, or your spouse worked, you could have them take more out in taxes from their pay every pay period and not worry about paying in the quarterlies.
Do you have people that you help, that you'll do like a profit and loss for them? Do you go that far where you'll watch their profit and loss and help them make that decision? Or is that something you have them do on their own, or?
If they can provide me with a profit and loss, I can help them with their estimates. And I do that for a lot of people. It's most helpful if I have their prior year tax data. So brand new clients, when I haven't prepared the last year's return, it can be a little challenging to estimate the first year. But if I already have prepared a year's worth of returns, you can come to me. This is a perfect time of year to come mid-year and give me like a year-to-date profit and loss, January through June. And I can look and tell you if your estimates are on track or if you should be making more or less. So that is something that I help people with quite a bit, but I want them to be able to provide. It doesn't have to be an official profit and loss. I have a massage therapist client of mine that just jots it down on a piece of paper, what she's grossed so far and her few expenses that she has, but just so I can arrive at some sort of net income total. And then I'll ask, do you expect the rest of the year to be about the same, or are you seeing an increase? And then we'll estimate based on that.
Do you ever see expenses that, like, say, meals and entertainment that are $10,000 in a month's time or something that you find is questionable? And if you do, how do you have that conversation with your client?
Well, entertainment is no longer deductible at all, sadly. So that makes that conversation a lot easier. Because in the past, we did kind of have to, it was pretty subjective. Like, okay, you're buying box seats at this sporting event for your clients. Okay, I'm pretty sure you might do that even if you weren't doing this business thing. But yeah, sadly, those aren't deductible at all anymore. And when it comes to meals, I explain to them what the tax code says about what meals are deductible, and then I let them provide me with the number. So this is actually something I just implemented a couple of years ago. I have a worksheet. If clients don't have an official set of books where they can give me a profit and loss, I have them fill out a worksheet, which is essentially a profit and loss, and sign the bottom saying that they're validating that those numbers are accurate and that I'm not auditing their books, I'm not looking through their receipts. So it really is on them to decide, and I just give them the information to make that decision.
Which is great. And if I'm a client and you've helped me with my return, and then the IRS comes back and says, I have a question about the return, do your clients generally refer them to you, or do your clients field those questions?
I think they usually tell me about it. There's probably some people that don't mention it, but I ask them proactively to send me anything they get. And then when they come back and fill out my questionnaire, I ask if they've received any letters in the past year. I would like to see them. Obviously, if it's something that I missed, I'll handle it for no charge. But a lot of times the IRS is just wanting some additional information, or they want you to prove something. And so I can handle that on their behalf if they're willing to pay, or I can just advise them on the best course for them to take care of it on their own. And they're starting to make it easier. I've seen that there's like somewhere now you can upload into a portal instead of having to fax or snail mail stuff to the IRS. So hopefully it'll get a little easier and more user-friendly, because I do feel bad having to charge people to deal with the IRS because it's a very time-consuming process. Thanks to the antiquated phone system, and like you pretty much, I know I need like a 2-hour block of time if I'm going to call the IRS about something, because I don't know how many times I've been stuck on hold and needed to like go get in my car and drive and get the kids and do this and that because I didn't expect to be on hold for 2 hours before I talked to somebody.
And then the other thing is the IRS has just hired a ton of lawyers to go after small businesses with respect to their returns, especially relating to like SBA loans and everything that happened during COVID. And they're really gearing up for really looking at returns. So it's important that people are honest and forthright with what they're submitting to the IRS. I mean, we all get a little creative, right? But too creative creates issues. So do you do most of your stuff virtually, or do your clients bring you in documents? How do you do that?
I've kind of transitioned. I prefer to do it virtually if possible. And that's for a number of reasons. I feel like it keeps my costs down, not having to buy as much like paper and ink and then pay for shredding and all the things that come along with the paper documents. Like even just the time of scanning them into my system, if you scan it on your end and upload it, that saves me a lot of time. So it keeps my costs down, and I still have kids at home. So I like to be able to work at home and have a little more flexible of a schedule. And by being virtual, I feel like I can serve clients in a lot wider area. They don't have to be specific to my geographic region. And I don't know, just the feedback that I've received from my clients over the years, the demographic that I'm working with is usually a little younger than me and more tech savvy, and they love the idea of being able to meet by Zoom and not have to drive somewhere and drop off and stuff like that. So that's predominantly what I do, but I sometimes miss the in-person like connection. And so during tax season, I am available for in-person appointments if people want to meet in person, thanks to your conference room. And also this coming tax season, I'll have some space in Oregon City also to meet with clients in person. But I will have to charge extra for that because it's extra time and it's a higher level of service. So if you want that, I'm going to be available for that. But if you like the budget friendly version and are able to scan and upload stuff on your own, then that's really helpful for me too. And I'll definitely keep accepting more clients like that.
That's wonderful. That's wonderful. I think, the only other question I had are there certain returns that you do not prepare? Certain types of returns. And if you don't prepare, then how do you refer people?
That's a good question. So like I mentioned earlier, I don't do C Corp returns. I just have not had any experience with them, and I don't feel like I would give the best service for that. So there's 2 other local accounting and tax offices here in town that I've met with the owners and know the people that work there and trust that they are capable of those type of returns. So that's where I send those. And then recently I just met Marilyn Morrissey, who's going to be letting me share her office space in Oregon City. And she does estate and trust tax returns. So I was excited to find someone to send those to because I hadn't really had anyone to refer that type of return to. So those are predominantly the 2 that I would refer out. I do individuals and I do a small number of S Corp and partnership returns. I only have room for a couple new clients that have that type of return for this season. Really, most of my clients are individual returns that just have a small business that's reported on their individual return or a rental property or something like that.
And do you have any intention of expanding? Because I have a lot of clients whose CPAs, this seems to be the norm, are retiring. And so they're having a difficult time finding both bookkeepers and CPAs. And I find that, as am I. So when I reach out to people, like I share, as you're aware, a building that has 2 firms in it, and they're at capacity. They're not taking any further clients. And so do you anticipate expanding in the future your practice, or?
That has been on my mind for about the last year now because I want to be able to help more people, but I was feeling like I was at capacity on my own. So I'm excited to be bringing on an employee in September or October who's going to take over a lot of the admin side of things and just free up a lot more of my time to take on new clients. So as long as that all goes smoothly, I think I'll be able to open up for probably 50 to 100 new clients, which was about what I was able to take on last year. I think 85 new clients last year felt like a good number. I don't want to lose that personal feel. I don't want to grow to the point where I'm just handing my clients off to someone else. I still want to be able to deal with them, but I want someone else to be helping me with all the other stuff. So that's my short-term plan. And then my long-term plan is I need to go start talking about taxes at my kids' school career day and get more people excited about doing taxes for a living, because otherwise I don't know what we're going to do, because there is a huge shortage. And I know that like with all the AI stuff and technology, people are going to be able to prepare their own tax returns. I use software to prepare. I don't have anything against TurboTax. I think it does a good job of preparing your return, but I think what people need help with is understanding what to put in there, you know, what can I deduct, what can't I deduct? And then the strategic part of like planning ahead, like, okay, I'm looking at what happened last year. Oh crap, I paid a lot of tax. What can I do this coming year to not have to pay as much in tax? So, yeah, I think that there will still be a big need in the industry. So if anybody.
It's the same in the legal profession. It's never just about the forms. It's about the people behind the knowledge that goes with completing that keep you out of trouble, because
Mhm.
that's what comes when you don't have the knowledge to do what you're trying to do is trouble.
Yeah,
And most people I see anymore they don't have basic issues. Like there's always some overlying something else going on, you know, family and money especially.
Mhm.
It's always difficult. So well, it's Shay, thank you for allowing me to be with you today. This has been a pleasure, and love all the information you've given, and I appreciate you and all your expertise. So
Well, thank you. I say the same about you. I appreciate you being here today, and this was fun to get to know each other better.
well, I look forward to joining in on, keep me in the loop with your future Zoom conferences, because I'd love to join. So,
Okay, I'll put you on my newsletter list, okay?
okay, sounds perfect.
All right, thanks,
Thanks,
Laura.
Shay. Okay,
Bye.
bye.